Question 1. What is a characteristic feature of term life insurance policies in Massachusetts? A. They build cash value over time. B. They provide coverage for the entire life of the insured. C. They offer flexible premium payments. D. They provide coverage for a specific period of time. Correct answer. D. They provide coverage for a specific period of time. Explanation. Term life insurance policies in Massachusetts offer coverage for a specified duration, such as 10, 20, or 30 years. They do not accumulate cash value and typically have lower initial premiums compared to permanent life insurance policies. Term policies are suitable for individuals seeking temporary coverage to protect against financial obligations during specific periods, like raising children or paying off a mortgage. Question 2. What distinguishes universal life insurance policies from other types of life insurance in Massachusetts? A. They have fixed premiums for the entire policy duration. B. They offer a guaranteed death benefit regardless of market conditions. C. They allow flexibility in premium payments and policy coverage. D. They have a limited duration of coverage. Correct answer. C. They allow flexibility in premium payments and policy coverage. Explanation. Universal life insurance policies in Massachusetts provide flexibility in premium payments, allowing policyholders to adjust the amount and frequency of payments based on their financial circumstances. These policies also offer flexibility in adjusting the death benefit and may accumulate cash value based on interest rates and market performance. Unlike term life insurance, universal life policies remain in force as long as there is sufficient cash value to cover expenses. Question 3. What key feature distinguishes whole life insurance policies from other types of life insurance in Massachusetts? A. They offer coverage for a specific period of time. B. They allow for flexible premium payments. C. They provide guaranteed cash value accumulation over time. D. They are tied to market performance. Correct answer. C. They provide guaranteed cash value accumulation over time. Explanation. Whole life insurance policies in Massachusetts guarantee a fixed premium amount and a death benefit payable to the beneficiaries upon the insured's death. One distinguishing feature of whole life policies is the guaranteed cash value accumulation over time, which can be accessed by policyholders through loans or withdrawals. Whole life insurance provides lifetime coverage and offers a conservative approach to building cash value within the policy. Question 4. Mr. Davis is considering purchasing a life insurance policy that allows him to invest a portion of his premiums in various subaccounts, including stocks and bonds. What type of life insurance policy is he likely considering? A. Term life insurance. B. Whole life insurance. C. Universal life insurance. D. Variable life insurance. Correct answer. D. Variable life insurance. Explanation. Variable life insurance policies allow policyholders to allocate a portion of their premiums into investment accounts, known as subaccounts. The cash value and death benefit of variable life insurance policies can fluctuate based on the performance of these investments. Policyholders assume the investment risk and have the potential for higher returns compared to traditional whole life or universal life insurance. Question 5. Which of the following statements best describes final expense insurance policies in Massachusetts? A. They provide coverage for long-term care expenses. B. They are designed to cover funeral and burial costs. C. They require a medical exam for approval. D. They offer cash value accumulation over time. Correct answer. B. They are designed to cover funeral and burial costs. Explanation. Final expense insurance policies, also known as burial insurance or funeral insurance, are specifically designed to cover funeral and burial costs. These policies typically have lower face values compared to traditional life insurance policies and are intended to provide financial assistance to beneficiaries for immediate expenses following the insured's death. Question 6. What does an accidental death benefit rider provide in Massachusetts life insurance policies? A. Additional coverage for specific illnesses. B. Increased benefits if death occurs as a result of an accident. C. Cash value accumulation over time. D. Access to policy loans during the insured's lifetime. Correct answer. B. Increased benefits if death occurs as a result of an accident. Explanation. An accidental death benefit rider in Massachusetts life insurance policies provides additional benefits to beneficiaries if the insured's death is the result of a covered accident. This rider supplements the standard death benefit and offers financial protection in cases of accidental death, such as car accidents or falls. Question 7. What does a critical illness rider typically provide in a life insurance policy in Massachusetts? A. Coverage for routine medical expenses. B. Payment of a lump sum benefit upon diagnosis of specified illnesses. C. Access to policy loans during the insured's lifetime. D. Guaranteed minimum death benefit. Correct answer. B. Payment of a lump sum benefit upon diagnosis of specified illnesses. Explanation. A critical illness rider is an optional provision that can be added to a life insurance policy in Massachusetts. This rider provides an additional benefit by paying a lump sum amount to the insured upon diagnosis of a covered critical illness, such as cancer, heart attack, or stroke. The purpose of this rider is to help the insured cover medical expenses or other financial needs associated with a serious illness. Question 8. Which of the following describes a disability income rider in a life insurance policy in Massachusetts? A. Provides a lump sum payment upon the insured's death. B. Offers coverage for long-term care expenses. C. Pays a monthly benefit if the insured becomes disabled and unable to work. D. Guarantees cash value accumulation over time. Correct answer. C. Pays a monthly benefit if the insured becomes disabled and unable to work. Explanation. A disability income rider is designed to provide income replacement if the insured becomes disabled due to sickness or injury and is unable to work. In Massachusetts life insurance policies, this rider pays a monthly benefit for a specified period of time during the insured's disability. It helps the insured maintain financial stability by replacing lost income due to disability. Question 9. What is the primary purpose of a long-term care insurance rider in a life insurance policy in Massachusetts? A. Provides coverage for funeral expenses. B. Pays a lump sum benefit upon diagnosis of a critical illness. C. Covers expenses associated with nursing home care or home health care. D. Offers investment options within the policy. Correct answer. C. Covers expenses associated with nursing home care or home health care. Explanation. A long-term care insurance rider is intended to cover expenses related to long-term care services, such as nursing home care or home health care, in Massachusetts life insurance policies. This rider helps policyholders manage the high costs of long-term care, which are not typically covered by health insurance or Medicare. It provides financial protection against the potential need for extended care services in the future. Question 10. What does a spousal or child term rider typically provide in a life insurance policy in Massachusetts? A. Coverage for funeral expenses of the insured spouse or child. B. Additional term insurance coverage on the life of the insured spouse or child. C. Investment options within the policy for the insured's family members. D. A lump sum benefit payable to the insured upon the birth of a child. Correct answer. B. Additional term insurance coverage on the life of the insured spouse or child. Explanation. A spousal or child term rider is an add-on provision available in life insurance policies in Massachusetts. This rider provides additional term insurance coverage on the life of the insured spouse or child. It allows the insured to extend the life insurance protection to family members by adding them as insured parties under the same policy. In the event of the spouse's or child's death during the term of the rider, a death benefit is payable to the insured. Question 11. What is the primary purpose of the underwriting process for different types of insurance in Massachusetts? A. To determine the premium payment schedule for the insured. B. To assess the risks associated with insuring a particular individual or entity. C. To handle claims related to property damage or liability issues. D. To provide investment advice to policyholders. Correct answer. B. To assess the risks associated with insuring a particular individual or entity. Explanation. The underwriting process in Massachusetts involves assessing the risks associated with insuring a specific individual or entity for different types of insurance, including property, liability, and health insurance. Underwriters evaluate factors such as the applicant's health status, occupation, lifestyle, and financial history to determine the insurability and appropriate premium rates. The primary goal of underwriting is to analyze and manage risk effectively to ensure that insurance policies are priced accurately and fairly. Question 12. What risk assessment tools and methodologies are commonly used in underwriting for insurance policies in Massachusetts? A. Credit scores and loan repayment history. B. Blood pressure and cholesterol level tests. C. Actuarial analysis and statistical modeling. D. Market research and customer surveys. Correct answer. C. Actuarial analysis and statistical modeling. Explanation. In Massachusetts, underwriters utilize various risk assessment tools and methodologies, with actuarial analysis and statistical modeling being among the most common. Actuaries apply mathematical and statistical techniques to analyze insurance risks, predict future claim costs, and set appropriate premium rates. This process involves studying historical data, mortality rates, morbidity rates, and other relevant factors to assess risk accurately. Actuarial analysis plays a critical role in underwriting decisions to ensure that insurance policies remain financially viable and sustainable. Question 13. Which of the following accurately describes the use of actuarial tables and mortality tables in life insurance underwriting in Massachusetts? A. Actuarial tables are used to estimate investment returns, while mortality tables assess the health risks of the insured. B. Actuarial tables estimate the probability of death at various ages, while mortality tables estimate the probability of survival. C. Actuarial tables determine policy premiums, while mortality tables calculate policy benefits. D. Actuarial tables are used for medical underwriting, while mortality tables assess financial risks. Correct answer. B. Actuarial tables estimate the probability of death at various ages, while mortality tables estimate the probability of survival. Explanation. In life insurance underwriting in Massachusetts, actuarial tables and mortality tables are essential tools. Actuarial tables estimate the probability of death at different ages based on statistical data, enabling insurers to assess risk accurately. Mortality tables, on the other hand, estimate the probability of survival, which is crucial for calculating life insurance premiums and benefits. These tables help underwriters determine appropriate premium rates based on the insured's age, gender, health status, and other relevant factors. Question 14. What is the role of underwriting in determining policy premiums and coverage in Massachusetts? A. Underwriting focuses solely on claim settlement processes. B. Underwriting assesses policy benefits after the policy is issued. C. Underwriting evaluates risks and determines appropriate premiums and coverage. D. Underwriting provides investment advice to policyholders. Correct answer. C. Underwriting evaluates risks and determines appropriate premiums and coverage. Explanation. Underwriting plays a critical role in life insurance in Massachusetts by evaluating risks associated with insuring an individual. Underwriters assess factors such as the applicant's health, lifestyle, occupation, and financial history to determine the appropriate premium rates and coverage levels. This process helps insurers manage risk effectively and ensure that policy premiums are fair and equitable based on the insured's risk profile. Question 15. How does cash value accumulation work in permanent life insurance policies in Massachusetts? A. Cash value accumulation is not available in permanent life insurance policies. B. Cash value accumulates based on investment returns and interest credited to the policy. C. Cash value accumulation is tied to the insured's age and health status. D. Cash value accumulation is guaranteed regardless of policy performance. Correct answer. B. Cash value accumulates based on investment returns and interest credited to the policy. Explanation. In permanent life insurance policies in Massachusetts, a portion of the premium paid by the policyholder goes toward building cash value within the policy. The cash value accumulates over time based on the performance of underlying investments, such as bonds or equities, held by the insurer. Interest credited to the policy also contributes to cash value growth. Policyholders can access the cash value through policy loans or withdrawals, providing a savings component along with the life insurance coverage. Question 16. What are surrender charges and penalties associated with early policy termination in Massachusetts? A. Fees charged when upgrading a policy to a higher coverage amount. B. Penalties imposed for policyholders who withdraw funds from their policy prematurely. C. Charges applied to policyholders who change beneficiaries on their policy. D. Costs incurred when purchasing additional riders for a life insurance policy. Correct answer. B. Penalties imposed for policyholders who withdraw funds from their policy prematurely. Explanation. Surrender charges in Massachusetts are fees applied to policyholders who terminate their life insurance policy before a specified period, typically during the early years of the policy. These charges help compensate insurers for administrative costs and commissions associated with issuing the policy. Policyholders should be aware of surrender charges before making decisions to withdraw funds or terminate their policies prematurely. Question 17. What are policy loans, and what are their implications in Massachusetts life insurance policies? A. Loans that policyholders can obtain from banks using their policy as collateral. B. Loans provided by insurers to policyholders using the policy's cash value as collateral. C. Loans that allow policyholders to purchase additional coverage. D. Loans taken against the death benefit of the policy. Correct answer. B. Loans provided by insurers to policyholders using the policy's cash value as collateral. Explanation. Policy loans in Massachusetts allow policyholders to borrow funds from their life insurance policy's cash value. These loans accrue interest and reduce the death benefit payable to beneficiaries if not repaid. Policyholders should understand the implications of taking policy loans, including potential tax consequences and effects on the policy's long-term performance. Question 18. What rights do policy owners have regarding changing beneficiaries, assigning, or transferring the policy in Massachusetts? A. Policy owners cannot change beneficiaries once designated. B. Policy owners can change beneficiaries only upon the insurer's approval. C. Policy owners have the right to change beneficiaries, assign, or transfer the policy at any time. D. Policy owners can assign their policies but cannot change beneficiaries. Correct answer. C. Policy owners have the right to change beneficiaries, assign, or transfer the policy at any time. Explanation. In Massachusetts, policy owners have specific rights regarding their life insurance policies. They can change beneficiaries, assign the policy to another individual or entity, or transfer ownership to someone else. These rights offer flexibility and control over the policy's ownership and beneficiary designations, allowing policyholders to adapt to changing circumstances and estate planning needs. Question 19. Which of the following describes an annuity payout option that guarantees income for the lifetime of the annuitant only, with no survivor benefits? A. Joint and survivor annuity. B. Life with period certain annuity. C. Life-only annuity. D. Period certain annuity. Correct answer. C. Life-only annuity. Explanation. A life-only annuity provides guaranteed income payments for the lifetime of the annuitant only, with no survivor benefits. Once the annuitant passes away, the payments cease, regardless of how much has been paid out. Question 20. What are the tax implications of annuity withdrawals and distributions in Massachusetts? A. Annuity withdrawals are always tax-free. B. Withdrawals from annuities are taxed as ordinary income. C. Distributions from annuities are taxed at a lower capital gains rate. D. Annuity distributions are tax-deductible. Correct answer. B. Withdrawals from annuities are taxed as ordinary income. Explanation. In Massachusetts, as in most states, withdrawals and distributions from annuities are generally taxed as ordinary income. This means that the amount withdrawn is added to the annuitant's taxable income for the year in which the withdrawal occurs. Question 21. What is an annuity surrender period, and what are surrender charges associated with annuities? A. The period during which annuity payments are made to the beneficiary. B. The time frame during which the annuity holder can surrender the policy without incurring penalties. C. A phase in which annuity payments are tax-free. D. Charges applied if the annuity holder surrenders the policy prematurely. Correct answer. D. Charges applied if the annuity holder surrenders the policy prematurely. Explanation. An annuity surrender period is the duration during which the annuity holder is subject to surrender charges if they choose to terminate the annuity or withdraw funds beyond the allowable free withdrawal amount. Surrender charges are fees levied by the insurance company to cover costs and commissions associated with issuing the annuity. It's essential for policyholders to understand the surrender period and associated charges before committing to an annuity contract. Question 22. What are the beneficiary options for annuity death benefits in Massachusetts? A. The annuity death benefit must be paid out as a lump sum to the primary beneficiary. B. The annuity death benefit can only be paid to the estate of the deceased annuitant. C. The annuity death benefit can be paid out as a lump sum or in installments to the named beneficiary. D. The annuity death benefit is forfeited upon the death of the annuitant. Correct answer. C. The annuity death benefit can be paid out as a lump sum or in installments to the named beneficiary. Explanation. In Massachusetts, annuity death benefits offer flexibility in how they can be paid out to beneficiaries. The named beneficiary of the annuity can typically choose to receive the death benefit as a lump sum payment or in installments over a specified period, providing options to suit individual financial needs and circumstances. Question 23. Which of the following statements accurately describes insurance licensing and continuing education requirements for agents in Massachusetts? A. Insurance agents in Massachusetts are not required to obtain a license to sell insurance products. B. Insurance agents must renew their licenses every 2 years without any continuing education requirements. C. Insurance agents must pass a licensing exam and complete continuing education courses to maintain their licenses. D. Licensing requirements for insurance agents vary by county and are managed by local authorities. Correct answer. C. Insurance agents must pass a licensing exam and complete continuing education courses to maintain their licenses. Explanation. In Massachusetts, insurance agents are required to obtain a license by passing a state-approved licensing exam. Additionally, agents must complete continuing education courses periodically to renew their licenses and stay updated with industry regulations and practices. Question 24. What role do state insurance departments play in regulating insurance practices in Massachusetts? A. State insurance departments oversee federal insurance regulations within the state. B. State insurance departments provide insurance coverage to residents. C. State insurance departments enforce state-specific insurance laws and regulations. D. State insurance departments only handle health insurance-related matters. Correct answer. C. State insurance departments enforce state-specific insurance laws and regulations. Explanation. State insurance departments in Massachusetts are responsible for enforcing state-specific insurance laws and regulations. They oversee insurance practices, licensing of agents, consumer protections, and insurance company solvency within the state, ensuring compliance with state laws to protect policyholders and promote a stable insurance market. Question 25. How are insurance rates and forms regulated in Massachusetts? A. Insurance rates are regulated at the federal level, while insurance forms are regulated at the state level. B. Insurance rates and forms are both regulated at the state level by the Massachusetts Division of Insurance. C. Insurance rates and forms are self-regulated by insurance companies in Massachusetts. D. Insurance rates are determined solely by market competition without regulatory oversight. Correct answer. B. Insurance rates and forms are both regulated at the state level by the Massachusetts Division of Insurance. Explanation. In Massachusetts, insurance rates and forms are regulated by the state government through the Massachusetts Division of Insurance. This regulatory body ensures that insurance rates are fair, non-discriminatory, and actuarially sound. Insurance forms, including policy language and terms, are also subject to regulatory approval to protect consumers and maintain market stability. Question 26. What measures are taken to prevent and detect insurance fraud in Massachusetts? A. Insurance fraud is not considered a serious issue in Massachusetts. B. The federal government is solely responsible for insurance fraud prevention and detection in Massachusetts. C. The Massachusetts Division of Insurance collaborates with law enforcement agencies to investigate and prosecute insurance fraud. D. Insurance companies are solely responsible for detecting and preventing fraud among policyholders. Correct answer. C. The Massachusetts Division of Insurance collaborates with law enforcement agencies to investigate and prosecute insurance fraud. Explanation. Insurance fraud prevention and detection in Massachusetts involve a collaborative effort between the Massachusetts Division of Insurance and law enforcement agencies. The division conducts investigations, audits, and reviews to identify fraudulent activities within the insurance industry. This partnership helps safeguard insurance consumers and maintain the integrity of insurance operations in the state. Question 27. What ethical considerations apply to conflicts of interest in insurance sales and recommendations in Massachusetts? A. There are no specific ethical guidelines related to conflicts of interest in insurance sales in Massachusetts. B. Insurance agents are not subject to ethical guidelines regarding conflicts of interest. C. Insurance agents must disclose any conflicts of interest and act in the best interests of their clients. D. Conflicts of interest are solely regulated by federal agencies in Massachusetts. Correct answer. C. Insurance agents must disclose any conflicts of interest and act in the best interests of their clients. Explanation. In Massachusetts, insurance agents are required to disclose any conflicts of interest to their clients and act with integrity and honesty in their recommendations. Agents must prioritize the interests of their clients above their own interests or those of the insurance company. This ethical standard ensures transparency and fosters trust between insurance professionals and consumers. Question 28. What ethical considerations apply to underwriting and claims handling in Massachusetts? A. Underwriters and claims handlers are not subject to ethical guidelines in Massachusetts. B. Underwriters must prioritize profitability over fairness in their decisions. C. Claims handlers must process claims promptly and fairly, avoiding discrimination or bias. D. Underwriting and claims handling are solely regulated by federal agencies in Massachusetts. Correct answer. C. Claims handlers must process claims promptly and fairly, avoiding discrimination or bias. Explanation. In Massachusetts, ethical considerations require claims handlers to process claims promptly and fairly. They must adhere to state regulations that prohibit discrimination based on factors such as race, gender, or age. Fair claims handling is essential for maintaining consumer trust and ensuring that policyholders receive timely benefits. Question 29. Which professional codes of conduct apply to insurance agents and brokers in Massachusetts? A. There are no professional codes of conduct for insurance agents and brokers in Massachusetts. B. Insurance agents and brokers are bound by state and federal laws but not by professional codes of conduct. C. Insurance agents and brokers must adhere to ethical standards outlined by industry associations and state regulations. D. Professional codes of conduct for insurance agents and brokers are voluntary and not legally binding. Correct answer. C. Insurance agents and brokers must adhere to ethical standards outlined by industry associations and state regulations. Explanation. Insurance agents and brokers in Massachusetts are required to follow ethical standards outlined by industry associations and state regulations. These standards promote honesty, integrity, and transparency in dealings with clients and insurers. Adhering to professional codes of conduct is crucial for maintaining professionalism and accountability within the insurance industry. Question 30. What ethical issues arise in insurance marketing and advertising in Massachusetts? A. There are no specific ethical guidelines for insurance marketing and advertising in Massachusetts. B. Insurance marketing and advertising must be truthful, clear, and not misleading to consumers. C. Ethical issues in marketing and advertising are solely regulated by federal agencies. D. Insurance companies are not required to disclose policy terms in their advertisements. Correct answer. B. Insurance marketing and advertising must be truthful, clear, and not misleading to consumers. Explanation. In Massachusetts, ethical issues in insurance marketing and advertising center around truthfulness and transparency. Insurance companies must ensure that their marketing materials accurately represent their products and services without misleading consumers. State regulations require clear and understandable disclosures to help consumers make informed decisions about insurance purchases. Question 31. What is a key feature of health insurance plans in Massachusetts? A. Health insurance plans in Massachusetts do not cover preventive care. B. Health insurance plans must provide coverage for essential health benefits. C. Health insurance plans are not required to cover prescription drugs. D. Health insurance plans in Massachusetts have unlimited out-of-pocket costs. Correct answer. B. Health insurance plans must provide coverage for essential health benefits. Explanation. In Massachusetts, health insurance plans are required to provide coverage for essential health benefits, which include services such as preventive care, maternity care, mental health services, prescription drugs, and more. This requirement ensures that individuals have access to comprehensive health coverage that meets their essential healthcare needs. Question 32. Which type of health insurance plan emphasizes primary care physician (PCP) coordination and requires referrals for specialist visits? A. Health Maintenance Organization (HMO). B. Preferred Provider Organization (PPO). C. Exclusive Provider Organization (EPO). D. Point of service, POS, plan. Correct answer. A. Health Maintenance Organization, HMO. Explanation. An HMO, Health Maintenance Organization, is a type of health insurance plan that emphasizes primary care physician, PCP, coordination. In an HMO, members are required to select a primary care physician who manages their healthcare needs and provides referrals to specialists when necessary. HMO plans typically have a network of providers and require members to use in-network services to receive coverage. Question 33. What are the coverage options offered by health insurance plans in Massachusetts that allow members to access out-of-network providers at a higher cost? A. Health Maintenance Organization, HMO. B. Preferred Provider Organization, PPO. C. Exclusive Provider Organization, EPO. D. Point of Service, POS, plan. Correct answer. B. Preferred Provider Organization, PPO. Explanation. A Preferred Provider Organization, PPO, is a type of health insurance plan that offers coverage options allowing members to access both in-network and out-of-network providers. While PPOs provide greater flexibility in choosing healthcare providers, using out-of-network services typically results in higher out-of-pocket costs compared to in-network services. PPO plans do not require referrals for specialist visits, unlike HMO plans. Question 34. What does a health insurance policy's deductible refer to? A. The amount the insured must pay out of pocket before the insurance company begins to cover expenses. B. The maximum amount the insurance company will pay for covered medical expenses in a policy year. C. The fixed amount the insured pays for each visit to a healthcare provider. D. The percentage of medical expenses that the insured must pay after meeting the deductible. Correct answer. A. The amount the insured must pay out of pocket before the insurance company begins to cover expenses. Explanation. In health insurance, a deductible is the initial amount that the insured individual must pay out of pocket for covered healthcare services before the insurance company starts to contribute towards the expenses. After the deductible is met, the insurance plan typically covers a percentage of the remaining costs, coinsurance, or pays for covered services in full, depending on the policy terms. Question 35. What is the purpose of coinsurance in a health insurance policy? A. To limit the total amount of medical expenses that the insured must pay out of pocket each year. B. To share the cost of covered medical expenses between the insured and the insurance company after the deductible is met. C. To provide coverage for prescription drug expenses beyond the deductible. D. To reimburse the insured for medical expenses incurred while traveling abroad. Correct answer. B. To share the cost of covered medical expenses between the insured and the insurance company after the deductible is met. Explanation. Coinsurance is the percentage of covered medical expenses that the insured individual pays after meeting the deductible in a health insurance policy. It is a cost-sharing arrangement where the insurance company and the insured each pay a portion of the covered expenses. For example, if the coinsurance is 20%, the insured pays 20% of the expenses, and the insurance company pays the remaining 80%. Question 36. What are coverage limits in a health insurance policy? A. The maximum number of physician visits allowed per year under the plan. B. The total dollar amount that the insurance company will pay for covered medical services. C. The minimum amount of time the insured must wait before certain benefits become effective. D. The specific medical conditions or services that are not covered by the insurance policy. Correct answer. B. The total dollar amount that the insurance company will pay for covered medical services. Explanation. Coverage limits refer to the maximum dollar amount that the insurance company will pay for covered medical services over a specified period, such as a policy year or the insured's lifetime. These limits can apply to specific services, such as hospital stays or surgical procedures, and can vary depending on the terms of the health insurance policy. Exceeding coverage limits may result in the insured being responsible for paying the additional costs. Question 37. Which of the following is a key step in the underwriting process for health insurance? A. Assessing the insured's credit score. B. Evaluating the insured's driving record. C. Reviewing the insured's medical history and current health status. D. Analyzing the insured's investment portfolio. Correct answer. C. Reviewing the insured's medical history and current health status. Explanation. In health insurance underwriting, one of the critical steps is to review the applicant's medical history and current health status. This assessment helps insurance companies evaluate the level of risk associated with insuring the individual. Factors such as pre-existing conditions, lifestyle choices, and overall health play a significant role in determining insurability and premium rates. Question 38. What are some factors that can affect an individual's insurability for health insurance coverage? A. Occupation and income level. B. Driving record and credit score. C. Medical history and current health conditions. D. Age and marital status. Correct answer. C. Medical history and current health conditions. Explanation. An individual's insurability for health insurance coverage is influenced by factors such as their medical history and current health conditions. Insurance companies assess these factors to determine the likelihood of future claims. Pre-existing conditions, chronic illnesses, and risky health behaviors can impact insurability and affect premium rates. Question 39. What is the purpose of risk selection and classification in health insurance underwriting? A. To deny coverage to high-risk individuals. B. To identify individuals who qualify for premium discounts. C. To assign appropriate premium rates based on risk level. D. To limit coverage for certain medical services. Correct answer. C. To assign appropriate premium rates based on risk level. Explanation. Risk selection and classification in health insurance underwriting involve assessing the level of risk associated with insuring an individual and assigning appropriate premium rates. Insurers use this process to determine how much to charge for coverage based on the applicant's health status, medical history, age, and other risk factors. The goal is to maintain a balanced risk pool and ensure fair pricing for policyholders. Question 40. Which of the following is a key component of HIPAA regulations related to health insurance? A. Requirements for annual open enrollment periods. B. Protection of individuals' health information privacy. C. Establishment of essential health benefits. D. Regulation of insurance premium rates. Correct answer. B. Protection of individuals' health information privacy. Explanation. HIPAA, Health Insurance Portability and Accountability Act, regulations include provisions to protect individuals' health information privacy. This involves strict rules on how health information can be used and disclosed by covered entities, such as health plans, healthcare providers, and healthcare clearinghouses. HIPAA aims to safeguard the confidentiality and security of individuals' health data. Question 41. Which federal legislation established essential health benefits and preventive care coverage requirements for health insurance plans? A. Health Insurance Portability and Accountability Act, HIPAA. B. Medicare Access and Chip Reauthorization Act, MACRA. C. Affordable Care Act, ACA. D. Consolidated Omnibus Budget Reconciliation Act, COBRA. Correct answer. C. Affordable Care Act, ACA. Explanation. The Affordable Care Act, ACA, established essential health benefits and preventive care coverage requirements for health insurance plans. This includes coverage for certain essential health services, such as preventive care, prescription drugs, maternity care, mental health services, and more. The ACA aimed to improve access to comprehensive health insurance coverage and set standards for health plan offerings. Question 42. What types of regulations are governed by both state and federal laws in the realm of health insurance? A. Premium setting and rate approval. B. Provider network requirements. C. Rules for pre-existing condition exclusions. D. Consumer protections and insurance market oversight. Correct answer. D. Consumer protections and insurance market oversight. Explanation. Consumer protections and insurance market oversight are areas governed by both state and federal laws in health insurance regulation. While states have authority over insurance regulation within their borders, federal laws such as the ACA provide overarching standards for consumer protections, insurance market rules, and eligibility criteria. This dual oversight ensures a balance between state-specific needs and federal-level standards in the health insurance industry. Question 43. What is the purpose of health insurance exchanges, marketplaces, established under the Affordable Care Act, ACA? A. To provide health coverage exclusively for Medicare beneficiaries. B. To facilitate the purchase of private health insurance plans for individuals and small businesses. C. To regulate insurance premium rates for large employers. D. To administer Medicaid coverage for low-income individuals. Correct answer. B. To facilitate the purchase of private health insurance plans for individuals and small businesses. Explanation. Health insurance exchanges, also known as marketplaces, were created under the ACA to offer a platform where individuals, families, and small businesses can compare and purchase private health insurance plans. These exchanges provide options for different coverage levels and help consumers access affordable health insurance options. Question 44. Which statement accurately describes the enrollment periods and special enrollment options available in health insurance marketplaces? A. Open enrollment periods occur only once a year and are the only times individuals can sign up for health coverage. B. Special enrollment periods allow individuals to enroll in a health plan outside of the open enrollment period under specific qualifying circumstances. C. Enrollment in health insurance plans is unrestricted and can occur at any time of the year. D. Only employers can enroll employees in health insurance plans during designated periods. Correct answer. B. Special enrollment periods allow individuals to enroll in a health plan outside of the open enrollment period under specific qualifying circumstances. Explanation. Open enrollment periods occur annually and are the primary times when individuals can enroll in health insurance plans. However, special enrollment periods are available outside of open enrollment for individuals who experience certain qualifying life events, such as marriage, birth of a child, loss of other coverage, or relocation. Question 45. What are subsidies and premium tax credits offered through health insurance marketplaces? A. Subsidies are government payments made directly to healthcare providers to reduce medical costs. B. Premium tax credits are deductions applied to federal income taxes based on the cost of health insurance premiums. C. Subsidies and premium tax credits are financial assistance programs that help eligible individuals and families afford health insurance premiums. D. These programs are exclusively available to individuals covered under employer-sponsored health plans. Correct answer. C. Subsidies and premium tax credits are financial assistance programs that help eligible individuals and families afford health insurance premiums. Explanation. Subsidies and premium tax credits are forms of financial assistance provided through health insurance marketplaces to help eligible individuals and families afford the cost of health insurance premiums. These programs are based on income and can significantly reduce the out-of-pocket expenses associated with purchasing health coverage. Question 46. What characterizes managed care organizations, MCOs, in the context of health insurance? A. They primarily focus on fee-for-service payment models. B. They emphasize preventive care and cost-effective healthcare delivery. C. They do not involve provider networks or contracting arrangements. D. They only serve large employer groups. Correct answer. B. They emphasize preventive care and cost-effective healthcare delivery. Explanation. Managed care organizations, MCOs, are healthcare entities that focus on controlling costs while emphasizing preventive care and efficient healthcare delivery. MCOs often utilize provider networks, implement utilization review processes, and employ various managed care techniques to achieve these goals. Question 47. What role do network structures and provider contracting play in managed care organizations, MCOs? A. MCOs do not utilize provider networks or contracting arrangements. B. Network structures ensure that all healthcare providers are independent and not affiliated with any MCO. C. Provider contracting involves agreements with healthcare professionals to provide services at negotiated rates within the MCO's network. D. MCOs rely solely on government reimbursement for services. Correct answer. C. Provider contracting involves agreements with healthcare professionals to provide services at negotiated rates within the MCO's network. Explanation. Managed care organizations, MCOs, establish provider networks through contracting arrangements with healthcare providers. These contracts specify rates for services provided within the network, allowing MCOs to control costs and ensure access to care for their members. Question 48. What is the purpose of utilization review and managed care techniques employed by managed care organizations, MCOs? A. To maximize out-of-pocket expenses for patients. B. To restrict access to healthcare services. C. To assess the medical necessity and appropriateness of healthcare services. D. To eliminate preventive care options. Correct answer. C. To assess the medical necessity and appropriateness of healthcare services. Explanation. Utilization review and managed care techniques are used by MCOs to evaluate the medical necessity and appropriateness of healthcare services provided to patients. These techniques help control costs, ensure quality of care, and promote efficient resource allocation within the managed care system. Question 49. What is a critical step in health insurance claims processing and adjudication? A. Denying all claims to minimize costs. B. Utilizing a complex system to confuse policyholders. C. Reviewing claims for accuracy, completeness, and compliance with policy terms. D. Automatically approving all claims without review. Correct answer. C. Reviewing claims for accuracy, completeness, and compliance with policy terms. Explanation. In health insurance claims processing and adjudication, it is crucial to review claims thoroughly to ensure they are accurate, complete, and comply with the terms of the policy. This step helps prevent incorrect payments and ensures that policyholders receive appropriate benefits based on their coverage. Question 50. What information is typically included in an explanation of benefits, EOB, or claims statement? A. Only the total cost of the medical services provided. B. Detailed information about the policyholder's health history. C. Breakdown of services rendered, billed charges, allowed amounts, and patient responsibility. D. None of the above. Correct answer. C. Breakdown of services rendered, billed charges, allowed amounts, and patient responsibility. Explanation. An explanation of benefits, EOB, or claims statement provides a detailed breakdown of the services rendered, billed charges, allowed amounts, and the portion for which the patient is responsible. It helps policyholders understand how their claims were processed and the financial implications. Question 51. What role does fraud prevention and detection play in health insurance claims? A. It is unnecessary because health insurance claims are always accurate. B. It helps minimize costs for insurance companies without impacting policyholders. C. It safeguards against fraudulent activities that can lead to increased premiums and reduced trust. D. It focuses solely on denying claims. Correct answer. C. It safeguards against fraudulent activities that can lead to increased premiums and reduced trust. Explanation. Fraud prevention and detection are essential in health insurance claims to protect against fraudulent activities. Detecting and preventing fraud helps maintain the integrity of the insurance system, reduces unnecessary costs, and preserves trust between insurers and policyholders. Question 52. Which ethical consideration is important in health insurance sales and service? A. Providing inaccurate information to policyholders. B. Disclosing all relevant policy details and exclusions transparently. C. Pressuring customers to purchase unnecessary coverage. D. Hiding policy terms to increase sales. Correct answer. B. Disclosing all relevant policy details and exclusions transparently. Explanation. Ethical health insurance sales and service require agents to disclose all relevant policy details and exclusions transparently to policyholders. This ensures informed decision-making and trust between agents and customers. Question 53. What are consumer rights and protections related to health insurance? A. Consumers have no rights in health insurance transactions. B. The right to clear and accurate information about their coverage. C. Consumers are not protected under health insurance laws. D. The right to pay higher premiums without explanation. Correct answer. B. The right to clear and accurate information about their coverage. Explanation. Consumer rights in health insurance include the right to clear and accurate information about coverage, costs, and benefits. These protections ensure that consumers can make informed decisions about their health insurance options. Question 54. What constitutes fair marketing and sales practices in health insurance? A. Misleading advertising that promises coverage not included in policies. B. Offering incentives to policyholders who cancel their coverage. C. Providing unbiased information about different policy options. D. Pressuring consumers to purchase policies without explanation. Correct answer. C. Providing unbiased information about different policy options. Explanation. Fair marketing and sales practices in health insurance involve providing unbiased and accurate information about different policy options to consumers. Agents should educate consumers on available choices without pressuring them to purchase specific policies. Question 55. Which of the following is an example of a supplemental health insurance product? A. Term life insurance policy. B. Disability income insurance. C. Critical illness insurance. D. Dental insurance policy. Correct answer. D. Dental insurance policy. Explanation. A dental insurance policy is considered a supplemental health insurance product that covers dental care expenses, such as routine cleanings, fillings, and other dental services. Question 56. What are optional policy riders and endorsements used for in health insurance? A. To decrease policy premiums. B. To add additional coverage or benefits to a base policy. C. To exclude coverage for pre-existing conditions. D. To limit the number of medical providers in a network. Correct answer. B. To add additional coverage or benefits to a base policy. Explanation. Optional policy riders and endorsements allow policyholders to customize their health insurance coverage by adding additional benefits or coverage options to a base policy, tailoring it to their specific needs. Question 57. What type of insurance product provides coverage for specific critical illnesses or long-term care needs? A. Disability income insurance. B. Dental insurance policy. C. Critical illness insurance. D. Vision insurance policy. Correct answer. C. Critical illness insurance. Explanation. Critical illness insurance is designed to provide coverage for specific critical illnesses, such as cancer, heart attack, or stroke. Long-term care insurance, on the other hand, provides coverage for assistance with daily living activities in case of chronic illness or disability. Question 58. What are the tax implications of health insurance premiums for individuals in Massachusetts? A. Health insurance premiums are tax-deductible for all individuals. B. Health insurance premiums are not tax-deductible for individuals. C. Health insurance premiums may be tax-deductible under certain conditions. D. Health insurance premiums are subject to a fixed tax rate. Correct answer. C. Health insurance premiums may be tax-deductible under certain conditions. Explanation. In Massachusetts, health insurance premiums may be tax-deductible if they meet certain criteria, such as being paid with after-tax dollars and exceeding a certain percentage of the individual's adjusted gross income. Taxpayers should consult with a tax advisor for specific guidance on deductibility. Question 59. What compliance regulations must insurers adhere to regarding health insurance benefits under IRS rules? A. Providing tax-free benefits to policyholders. B. Reporting health insurance benefits on Form W-2. C. Complying with IRS guidelines on health savings accounts, HSAs. D. Withholding taxes on health insurance premiums. Correct answer. B. Reporting health insurance benefits on Form W-2. Explanation. Under IRS regulations, insurers are required to report the value of health insurance benefits provided to employees on Form W-2. This reporting ensures compliance with tax laws and allows individuals to accurately report their benefits for tax purposes. Question 60. What are the reporting requirements for insurers and policyholders related to health insurance in Massachusetts? A. Insurers must report premiums paid by policyholders to the IRS. B. Policyholders must report health insurance benefits received to the state tax authority. C. Insurers must issue Form 1095 to policyholders for tax reporting purposes. D. Policyholders must report health insurance premiums paid as part of their annual tax return. Correct answer. C. Insurers must issue Form 1095 to policyholders for tax reporting purposes. Explanation. Insurers in Massachusetts are required to issue Form 1095 to policyholders, detailing the health insurance coverage provided during the tax year. This form helps policyholders accurately report their health insurance coverage on their tax returns, ensuring compliance with IRS reporting requirements. Question 61. Which of the following best describes telemedicine in the context of health insurance in Massachusetts? A. Telemedicine services are not covered under health insurance plans. B. Telemedicine involves the use of electronic communications to provide remote healthcare services. C. Telemedicine is covered only for specific conditions under health insurance plans. D. Telemedicine services are covered at a higher copayment rate. Correct answer. B. Telemedicine involves the use of electronic communications to provide remote healthcare services. Explanation. Telemedicine refers to the use of electronic communications, such as video calls or secure messaging, to deliver healthcare services remotely. Many health insurance plans in Massachusetts cover telemedicine services, allowing patients to consult with healthcare providers without the need for in-person visits. Question 62. What is a key feature of value-based care models in the context of health insurance? A. Value-based care models focus on increasing healthcare costs for patients. B. Value-based care models emphasize quality and outcomes over volume of services. C. Value-based care models are primarily used in emergency healthcare settings. D. Value-based care models are not compatible with existing health insurance plans. Correct answer. B. Value-based care models emphasize quality and outcomes over volume of services. Explanation. Value-based care models prioritize quality of care and patient outcomes, encouraging healthcare providers to deliver effective treatments and preventive services. These models aim to improve patient health while controlling costs, aligning with the goals of many health insurance plans in Massachusetts. Question 63. How do technological innovations impact healthcare delivery under health insurance plans in Massachusetts? A. Technological innovations have no influence on healthcare delivery. B. Technological innovations often increase administrative burdens for healthcare providers. C. Technological innovations enhance access to healthcare services and improve efficiency. D. Technological innovations are discouraged by health insurance regulations in Massachusetts. Correct answer. C. Technological innovations enhance access to healthcare services and improve efficiency. Explanation. Technological innovations, such as electronic health records, EHRs, and wearable devices, play a crucial role in improving healthcare delivery. These innovations enhance access to care, enable remote monitoring of patients, and improve communication between providers and patients. Health insurance plans in Massachusetts often support the adoption of such technologies to enhance patient outcomes and reduce costs. Question 64. Which of the following statements best describes term life insurance policies? A. Term life insurance policies provide coverage for the entire lifetime of the insured. B. Term life insurance policies have a cash value component that accumulates over time. C. Term life insurance policies offer coverage for a specific period, such as 10, 20, or 30 years. D. Term life insurance policies are typically permanent insurance products. Correct answer. C. Term life insurance policies offer coverage for a specific period, such as 10, 20, or 30 years. Explanation. Term life insurance policies provide coverage for a specified period, term, such as 10, 20, or 30 years. If the insured passes away during the term, a death benefit is paid to the beneficiary. Term policies do not accumulate cash value and are designed to provide affordable coverage for a defined period. Question 65. What is a key feature of universal life insurance policies? A. Universal life insurance policies offer fixed premiums throughout the policy's duration. B. Universal life insurance policies provide coverage for a specific term only. C. Universal life insurance policies have a flexible premium payment structure. D. Universal life insurance policies do not offer a death benefit to beneficiaries. Correct answer. C. Universal life insurance policies have a flexible premium payment structure. Explanation. Universal life insurance policies offer flexibility in premium payments and coverage. Policyholders can adjust their premium payments and death benefits over time, subject to certain limits and guidelines. Universal life policies also have a cash value component that earns interest based on current market rates. Question 66. Which of the following statements is true regarding whole life insurance policies? A. Whole life insurance policies do not have a cash value component. B. Whole life insurance policies provide coverage for a specific term only. C. Whole life insurance policies offer fixed premiums throughout the policy's duration. D. Whole life insurance policies have flexible premium payment options. Correct answer. C. Whole life insurance policies offer fixed premiums throughout the policy's duration. Explanation. Whole life insurance policies provide coverage for the insured's entire life, as long as premiums are paid. One key feature of whole life policies is that premiums remain fixed and do not change over time. Additionally, whole life policies accumulate cash value over time, which can be accessed by the policyholder through withdrawals or policy loans. Question 67. What is a key characteristic of variable life insurance policies? A. Premiums are fixed and do not change over time. B. Policyholders have the flexibility to invest the cash value in various investment options. C. Death benefits decrease over the policy's duration. D. Variable life insurance policies do not have a cash value component. Correct answer. B. Policyholders have the flexibility to invest the cash value in various investment options. Explanation. Variable life insurance policies allow policyholders to allocate the cash value portion of their policy into different investment options, such as mutual funds. The cash value and death benefit fluctuate based on the performance of these investments, offering potential for growth but also subject to investment risks. Question 68. What is the primary purpose of a final expense insurance policy? A. To provide coverage for specific medical expenses only. B. To cover funeral and burial expenses after the insured's death. C. To accumulate cash value over time. D. To provide coverage for disability-related expenses. Correct answer. B. To cover funeral and burial expenses after the insured's death. Explanation. Final expense insurance policies, also known as burial insurance or funeral insurance, are designed to cover the costs associated with a person's funeral and burial expenses. These policies typically have lower coverage amounts and are meant to ease the financial burden on the insured's family after their passing. Question 69. What does an accidental death benefit rider provide in a life insurance policy? A. Additional coverage in case of death due to natural causes. B. Double indemnity if death occurs due to an accident. C. Cash value accumulation over time. D. Premium discounts for policyholders. Correct answer. B. Double indemnity if death occurs due to an accident. Explanation. An accidental death benefit rider provides an additional benefit if the insured's death is a result of an accident. Typically, this rider pays out double the face amount of the policy if death is caused by a covered accident, such as a car accident or a fall. It provides extra financial protection in case of accidental death. Question 70. What does a critical illness rider typically provide in a life insurance policy? A. Additional death benefit coverage if the insured passes away due to a critical illness. B. Lump sum payment upon diagnosis of a covered critical illness, such as cancer or heart attack. C. Increased cash value accumulation over time. D. Coverage for routine medical expenses. Correct answer. B. Lump sum payment upon diagnosis of a covered critical illness, such as cancer or heart attack. Explanation. A critical illness rider is designed to provide a lump sum payment if the insured is diagnosed with a covered critical illness specified in the policy, such as cancer, heart attack, or stroke. This rider helps the insured cover medical expenses and other financial needs during a critical illness, complementing the basic life insurance coverage. Question 71. What is the primary purpose of a disability income rider in a life insurance policy? A. It provides coverage for disability-related medical expenses. B. It pays a monthly benefit if the insured becomes disabled and unable to work. C. It accelerates the death benefit payout upon disability. D. It increases the cash value of the policy over time. Correct answer. B. It pays a monthly benefit if the insured becomes disabled and unable to work. Explanation. A disability income rider offers supplemental income if the insured becomes disabled and unable to work due to injury or illness. This rider provides a monthly benefit for a specified period during the disability, helping to replace lost income and cover ongoing expenses. Question 72. What does a long-term care insurance rider provide in a life insurance policy? A. It offers coverage for routine medical care and doctor visits. B. It accelerates the death benefit to cover long-term care expenses. C. It pays a monthly benefit to cover assisted living or nursing home costs. D. It increases the policy's cash value over time. Correct answer. C. It pays a monthly benefit to cover assisted living or nursing home costs. Explanation. A long-term care insurance rider provides a monthly benefit to cover expenses related to long-term care services, such as assisted living facilities or nursing homes. This rider helps policyholders manage the costs of long-term care without depleting their savings or retirement funds. Question 73. Which statement accurately describes a spousal or child term rider in a life insurance policy? A. It provides coverage for a spouse's or child's pre-existing medical conditions. B. It allows the insured to add coverage for a spouse or child under the same policy. C. It increases the cash value of the policy over time. D. It covers routine medical expenses for the insured's family members. Correct answer. B. It allows the insured to add coverage for a spouse or child under the same policy. Explanation. A spousal or child term rider is an optional addition to a life insurance policy that allows the insured to extend coverage to their spouse or child under the same policy. This rider typically provides a specified amount of additional coverage for the spouse or child, often with a term matching that of the primary insured's coverage. Question 74. What is the primary purpose of the underwriting process in health insurance? A. To assess the insured's eligibility for coverage based on pre-existing conditions. B. To determine the premium amount for the policy. C. To review and approve policy claims. D. To evaluate and manage the insurer's risk by assessing the applicant's health and lifestyle. Correct answer. D. To evaluate and manage the insurer's risk by assessing the applicant's health and lifestyle. Explanation. The underwriting process in health insurance involves evaluating the applicant's health status, medical history, and lifestyle factors to assess the insurer's risk. This helps determine the applicant's eligibility for coverage and sets the appropriate premium based on the perceived risk level. Question 75. Which risk assessment tools and methodologies are commonly used in insurance underwriting? A. Actuarial tables and mortality charts. B. Medical exams and lab tests. C. Credit scores and income verification. D. Claim history and driving records. Correct answer. A. Actuarial tables and mortality charts. Explanation. Insurance underwriters rely on actuarial tables and mortality charts to assess risk and predict the likelihood of claims. These tools provide statistical data on mortality rates, life expectancy, and other factors that help insurers calculate premiums and assess the financial implications of covering an individual. Question 76. How do actuarial tables and mortality tables contribute to life insurance underwriting? A. They determine the premium payment schedule. B. They assess the policy owner's rights and benefits. C. They evaluate an applicant's health and lifestyle factors. D. They provide statistical data on life expectancy and mortality rates. Correct answer. D. They provide statistical data on life expectancy and mortality rates. Explanation. Actuarial tables and mortality tables are essential tools used in life insurance underwriting. These tables provide statistical data on life expectancy and mortality rates based on various factors like age, gender, and health status. Insurers use this data to assess risk and calculate appropriate premiums for life insurance policies. Question 77. What role does underwriting play in determining policy premiums and coverage? A. Underwriting determines the frequency of premium payments. B. Underwriting ensures policy benefits are accurately disclosed. C. Underwriting assesses the insurer's risk and sets premiums and coverage terms. D. Underwriting manages policy claims and benefit payouts. Correct answer. C. Underwriting assesses the insurer's risk and sets premiums and coverage terms. Explanation. Underwriting is the process of evaluating an applicant's risk profile to determine the appropriate premiums and coverage for a life insurance policy. Underwriters assess factors such as health status, lifestyle, and occupation to calculate the level of risk and set terms for premiums and coverage based on this assessment. Question 78. How does cash value accumulate in permanent life insurance policies? A. Cash value is fixed and does not accumulate over time. B. Cash value accumulates through investment returns on the policy's cash account. C. Cash value accumulates based on the insured's medical history. D. Cash value is determined solely by the policy owner's age. Correct answer. B. Cash value accumulates through investment returns on the policy's cash account. Explanation. In permanent life insurance policies such as whole life or universal life, a portion of the premiums paid by the policy owner goes into a cash account within the policy. This cash value accumulates over time through investment returns, such as interest or dividends. Policy owners can access this cash value through policy loans or withdrawals, providing a savings component along with the death benefit. Question 79. What are surrender charges in life insurance policies? A. Fees paid by the insurer to the policy owner upon policy termination. B. Penalties imposed on the policy owner for early policy surrender or withdrawal. C. Premium payments made by the policy owner to maintain coverage. D. Benefits provided to the policy owner upon reaching a certain age. Correct answer. B. Penalties imposed on the policy owner for early policy surrender or withdrawal. Explanation. Surrender charges are fees or penalties imposed on the policy owner if they terminate or surrender their life insurance policy before a specified period, typically during the policy's surrender period. These charges are designed to cover the insurer's costs and mitigate potential losses associated with early policy termination. Policy owners should be aware of surrender charges before deciding to surrender their policies prematurely. Question 80. What are policy loans in life insurance, and what are their implications? A. Loans offered by banks secured against the policy's cash value. B. Loans provided by employers for insurance premium payments. C. Loans taken by the policy owner against the cash value of the life insurance policy. D. Loans used by insurers to finance policyholder benefits. Correct answer. C. Loans taken by the policy owner against the cash value of the life insurance policy. Explanation. Policy loans allow policy owners to borrow funds from the cash value accumulated within their life insurance policies. The loan amount is secured by the policy's cash value and accrues interest. Failure to repay the loan may reduce the death benefit and potentially lead to policy lapse if not managed properly. Policy owners should understand the implications of taking policy loans, including interest accrual and impact on policy values. Question 81. What rights does a policy owner have regarding beneficiaries, assignment, or policy transfer? A. Policy owners cannot change beneficiaries once designated. B. Policy owners can assign or transfer policies only with insurer approval. C. Policy owners have the right to change beneficiaries, assign, or transfer policies without insurer approval. D. Policy owners must notify beneficiaries directly without involving the insurer. Correct answer. C. Policy owners have the right to change beneficiaries, assign, or transfer policies without insurer approval. Explanation. Policy owners have specific rights regarding their life insurance policies, including the ability to change beneficiaries, assign the policy to another party, or transfer ownership rights. These actions can usually be done without insurer approval, but policy owners should understand the process and implications involved in making such changes to their policies. Question 82. What are the different annuity payout options available to annuitants? A. Lump sum payment only. B. Life only option, joint life option, and period certain option. C. Monthly payments only. D. Quarterly payments only. Correct answer: B. Life only option, joint life option, and period certain option. Explanation: annuity payout options determine how and when annuitants receive payments from their annuity contracts. The life-only option provides payments for the annuitant's lifetime. The joint life option continues payments for the lifetime of the annuitant and a named survivor, and the period certain option guarantees payments for a specified period. These options offer flexibility to annuitants based on their needs and circumstances. Question 83. What are the tax implications of annuity withdrawals and distributions? A. Annuity withdrawals are always tax-free. B. Annuity distributions are taxed as ordinary income. C. Annuity distributions are taxed at capital gains rates. D. Annuity withdrawals are subject to a flat tax rate. Correct answer: B. Annuity distributions are taxed as ordinary income. Explanation: annuity distributions are generally treated as ordinary income for tax purposes. Withdrawals from annuities are subject to income tax, and if withdrawn before age 59 and a half, they may also be subject to an additional 10% penalty tax. It's important for annuitants to consider these tax implications before making withdrawals or distributions from their annuity contracts. Question 84. What is an annuity surrender period, and what are surrender charges? A. Annuity surrender period is the period during which annuitants receive payments. B. Annuity surrender period is the time when annuitants cannot make withdrawals. C. Annuity surrender period is the period during which surrender charges apply for early withdrawals. D. Annuity surrender period is the time during which annuitants can purchase additional annuities. Correct answer: C. Annuity surrender period is the period during which surrender charges apply for early withdrawals. Explanation: an annuity surrender period is the initial period after purchasing an annuity during which surrender charges apply if the annuitant wishes to withdraw funds or surrender the contract. Surrender charges are fees imposed by the insurer to cover expenses and commissions associated with selling the annuity. It's important for annuitants to be aware of surrender periods and charges before purchasing annuities. Question 85. What are the beneficiary options available for annuity death benefits in Massachusetts? A. Beneficiaries can only receive a lump sum payment. B. Beneficiaries can choose between a lump sum payment or installment payments. C. Beneficiaries can only receive installment payments. D. Beneficiaries can receive annuity payments for their lifetime. Correct answer: B. Beneficiaries can choose between a lump sum payment or installment payments. Explanation: in Massachusetts, beneficiaries of annuity death benefits have options for how they receive the benefits. They can elect to receive a lump sum payment or structured installment payments over time. This flexibility allows beneficiaries to choose the option that best suits their financial needs and circumstances. Question 86. What are the insurance licensing and continuing education requirements for agents in Massachusetts? A. Agents are not required to be licensed in Massachusetts. B. Agents must pass a licensing exam and complete ongoing continuing education. C. Agents only need to be licensed but are not required to complete continuing education. D. Agents must complete continuing education before obtaining a license. Correct answer: B. Agents must pass a licensing exam and complete ongoing continuing education. Explanation: in Massachusetts, insurance agents are required to be licensed to sell life and health insurance. This involves passing a licensing exam administered by the state. Additionally, agents must fulfill continuing education requirements to maintain their licenses. Continuing education ensures that agents stay updated on industry developments, regulations, and best practices. Question 87. What is the role of the Massachusetts Insurance Department in regulating insurance? A. The Insurance Department only oversees automobile insurance. B. The Insurance Department regulates all types of insurance within the state. C. The Insurance Department provides financial assistance to insurance companies. D. The Insurance Department handles healthcare regulations only. Correct answer. B. The Insurance Department regulates all types of insurance within the state. Explanation. The Massachusetts Insurance Department plays a vital role in regulating all types of insurance within the state, including life and health insurance. Its responsibilities include overseeing insurance companies, licensing agents, enforcing insurance laws, protecting consumer interests, and ensuring financial stability within the insurance industry. Question 88. What is the role of state and federal regulations in the regulation of insurance rates and forms in Massachusetts? A. State and federal regulations set specific insurance rates for all insurance products. B. State regulations oversee insurance rates, while federal regulations focus on insurance forms. C. Both state and federal regulations ensure that insurance rates are fair and not discriminatory. D. State regulations solely govern insurance forms, while federal regulations focus on rate filings. Correct answer. C. Both state and federal regulations ensure that insurance rates are fair and not discriminatory. Explanation. In Massachusetts, insurance rates and forms are subject to regulation by both state and federal authorities. State regulations ensure that insurance rates are fair and not discriminatory, protecting consumers from unfair pricing practices. Federal regulations complement state efforts by providing additional oversight and guidelines to promote transparency and fairness in insurance pricing. Question 89. What measures are in place for insurance fraud prevention and detection in Massachusetts? A. Insurance companies are solely responsible for fraud prevention measures. B. State agencies collaborate with insurance companies to detect and prevent fraud. C. There are no specific measures for fraud prevention in Massachusetts. D. Fraud prevention is overseen by federal agencies, not state authorities. Correct answer. B. State agencies collaborate with insurance companies to detect and prevent fraud. Explanation. In Massachusetts, comprehensive measures are in place for insurance fraud prevention and detection. State agencies work closely with insurance companies to identify fraudulent activities, investigate claims thoroughly, and prosecute offenders. These collaborative efforts aim to safeguard the integrity of the insurance industry and protect policyholders from fraudulent schemes. Question 90. What ethical considerations should insurance agents adhere to regarding conflicts of interest in insurance sales and recommendations in Massachusetts? A. Agents are not subject to ethical considerations regarding conflicts of interest. B. Agents must disclose conflicts of interest to clients and act in their best interests. C. Conflicts of interest are only relevant to insurers, not agents. D. Agents must prioritize their own financial interests in insurance sales. Correct answer. B. Agents must disclose conflicts of interest to clients and act in their best interests. Explanation. Ethical conduct is paramount in insurance sales and recommendations in Massachusetts. Insurance agents have a duty to disclose any conflicts of interest to clients and act in the client's best interests. This includes providing accurate information, recommending suitable insurance products, and avoiding actions that could compromise clients' interests for personal gain. Adhering to ethical standards strengthens consumer trust and promotes professionalism within the insurance industry. Question 91. What ethical considerations are important in underwriting and claims handling for insurance agents in Massachusetts? A. Maximizing profits without regard to policyholders' interests. B. Ensuring fairness and impartiality in underwriting and claims decisions. C. Underwriting policies based on personal relationships with clients. D. Providing preferential treatment to certain policyholders based on location. Correct answer. B. Ensuring fairness and impartiality in underwriting and claims decisions. Explanation. In Massachusetts, insurance agents must adhere to ethical standards that prioritize fairness and impartiality in underwriting and claims handling. Agents should evaluate risks objectively, apply consistent criteria, and make fair claims decisions based on policy terms and conditions. This approach promotes consumer trust and ensures equitable treatment for all policyholders. Question 92. What professional codes of conduct do insurance agents and brokers follow in Massachusetts? A. No specific codes of conduct apply to insurance professionals. B. Following guidelines set by individual insurance companies. C. Adhering to state and federal regulations governing insurance practices. D. Abiding by industry codes of ethics established by professional organizations. Correct answer. D. Abiding by industry codes of ethics established by professional organizations. Explanation. Insurance agents and brokers in Massachusetts are expected to adhere to industry codes of ethics established by professional organizations. These codes emphasize integrity, transparency, and client-centered practices. By following ethical guidelines, agents uphold professional standards and prioritize the interests of policyholders. Question 93. What ethical issues should insurance professionals consider in marketing and advertising practices in Massachusetts? A. Misleading statements to attract clients. B. Using deceptive tactics to increase sales. C. Ensuring advertising materials are accurate and not misleading. D. Making false promises about policy benefits. Correct answer. C. Ensuring advertising materials are accurate and not misleading. Explanation. Ethical marketing and advertising practices in Massachusetts require insurance professionals to ensure that all advertising materials are accurate, transparent, and not misleading. Agents should provide clear information about policy features, benefits, and limitations to enable informed decision-making by consumers. By upholding ethical standards in marketing, agents promote trust and credibility within the insurance industry. Question 94. What does health insurance typically cover in Massachusetts? A. Only preventive care services. B. Emergency medical care and hospitalization. C. Prescription drugs and routine checkups. D. All medical expenses, including elective procedures. Correct answer. B. Emergency medical care and hospitalization. Explanation. Health insurance in Massachusetts typically covers emergency medical care and hospitalization. This includes treatment for sudden illnesses, accidents, surgeries, and hospital stays. Health insurance policies vary, but they generally prioritize coverage for essential health services needed to address urgent medical needs. Question 95. Which type of health insurance plan is often associated with a primary care physician, PCP, who coordinates healthcare services? A. HMO, Health Maintenance Organization. B. PPO, Preferred Provider Organization. C. EPO, Exclusive Provider Organization. D. POS, Point of Service, Plan. Correct answer. A. HMO, Health Maintenance Organization. Explanation. In Massachusetts, an HMO, Health Maintenance Organization, is a type of health insurance plan where members select a primary care physician, PCP, to coordinate their healthcare services. The PCP manages referrals to specialists and oversees the member's overall care. HMOs emphasize preventive care and typically require members to use a network of healthcare providers. Question 96. Which type of health insurance plan offers greater flexibility in choosing healthcare providers but may have higher out-of-pocket costs? A. HMO, Health Maintenance Organization. B. PPO, Preferred Provider Organization. C. EPO, Exclusive Provider Organization. D. POS, Point of Service Plan. Correct answer: B. PPO, Preferred Provider Organization. Explanation: a PPO, Preferred Provider Organization, in Massachusetts allows members to choose healthcare providers both inside and outside the plan's network. This flexibility comes with higher out-of-pocket costs compared to HMOs. PPOs do not require referrals for specialists and offer more extensive coverage options, making them suitable for individuals who prioritize choice and flexibility in healthcare providers. Question 97. Which of the following accurately describes a health insurance policy provision related to coinsurance? A. Coinsurance is the maximum amount the insured person pays out of pocket each year before the insurance starts covering 100% of the costs. B. Coinsurance is the fixed dollar amount that the insured person must pay for covered services at each visit. C. Coinsurance is the percentage of covered medical expenses that the insured person pays after the deductible has been met. D. Coinsurance is a refund provided by the insurance company if the insured person does not use their coverage within a year. Correct answer: C. Coinsurance is the percentage of covered medical expenses that the insured person pays after the deductible has been met. Explanation: coinsurance is the percentage of covered medical expenses that the insured person is responsible for paying after the deductible has been met. For example, if the coinsurance is 20%, the insured would pay 20% of covered medical expenses, and the insurance company would pay the remaining 80%. This provision helps share the costs of healthcare services between the insured and the insurer. Question 98. What is a deductible in a health insurance policy? A. The amount that the insured person must pay out of pocket before the insurance company starts covering expenses. B. The fixed amount that the insurance company pays for each medical service. C. The maximum amount of money the insured person can spend on medical services in a given year. D. The amount of money the insurance company pays to the insured if they do not use their coverage within a year. Correct answer: A. The amount that the insured person must pay out of pocket before the insurance company starts covering expenses. Explanation: a deductible is the initial amount of covered expenses that the insured person must pay out of pocket before the insurance company begins to pay for covered services. Once the deductible is met, the insurance company starts sharing the costs of covered medical services according to the policy terms. Deductibles can vary depending on the insurance plan and are an important factor in determining out-of-pocket costs. Question 99. Which of the following represents a health insurance policy provision related to exclusions? A. Exclusions are services that are only partially covered by the insurance company, requiring the insured person to pay the difference. B. Exclusions are conditions or services that are not covered by the insurance policy. C. Exclusions are medical providers that the insured person cannot use with their insurance plan. D. Exclusions are discounts offered by the insurance company for using in-network providers. Correct answer: B. Exclusions are conditions or services that are not covered by the insurance policy. Explanation: exclusions refer to specific conditions, treatments, or services that are not covered by the health insurance policy. These may include certain elective procedures, cosmetic surgeries, or treatments for pre-existing conditions as defined by the policy. It's crucial for insured individuals to understand the exclusions in their policy to avoid unexpected out-of-pocket expenses. Question 100. Which of the following accurately describes the underwriting process for health insurance? A. Underwriting involves evaluating the insured's risk of dying prematurely. B. Underwriting assesses the insured's risk of developing chronic illnesses. C. Underwriting for health insurance focuses on evaluating the applicant's medical history and current health status. D. Underwriting primarily involves determining the insured's risk of property damage. Correct answer. C. Underwriting for health insurance focuses on evaluating the applicant's medical history and current health status. Explanation. The underwriting process for health insurance involves assessing an applicant's medical history, current health status, and other factors relevant to their insurability. Insurers use this information to evaluate the level of risk associated with insuring the individual and to determine appropriate premiums and coverage options. Understanding the underwriting process helps insurers make informed decisions and ensures that policy terms align with the applicant's health profile. Question 101. What factors can affect an individual's insurability in health insurance underwriting? A. Gender and ethnicity of the applicant. B. Applicant's credit score and financial history. C. Applicant's age, medical history, and lifestyle choices. D. Applicant's occupation and educational background. Correct answer. C. Applicant's age, medical history, and lifestyle choices. Explanation. Insurability in health insurance underwriting is influenced by various factors, including the applicant's age, medical history, and lifestyle choices. These factors provide insight into the applicant's overall health and potential risk for future medical expenses. Insurers assess these factors to determine the applicant's eligibility for coverage, premium rates, and policy terms. Age, pre-existing conditions, and lifestyle habits, e.g., smoking, exercise, can significantly impact an individual's insurability. Question 102. What does risk selection and classification refer to in health insurance underwriting? A. Categorizing applicants based on their financial stability. B. Assigning risk levels to applicants based on their geographic location. C. Evaluating and categorizing applicants based on their health status and risk factors. D. Classifying applicants based on their employment history and job security. Correct answer. C. Evaluating and categorizing applicants based on their health status and risk factors. Explanation. Risk selection and classification in health insurance underwriting involve evaluating applicants based on their health status, medical history, and other risk factors. Insurers categorize applicants into different risk classes based on these assessments to determine appropriate coverage and premiums. This process helps insurers manage risk and ensure that premiums reflect the level of risk associated with each applicant's health profile. Question 103. What are some key aspects of state and federal regulations governing health insurance in Massachusetts? A. Health insurance regulations cover only employer-sponsored plans. B. Regulations ensure that health insurance plans offer coverage for cosmetic procedures. C. Regulations govern aspects such as premium rates, coverage requirements, and consumer protections. D. Regulations focus solely on restricting access to healthcare services. Correct answer. C. Regulations govern aspects such as premium rates, coverage requirements, and consumer protections. Explanation. Health insurance regulations in Massachusetts encompass various aspects, including premium rate approval, coverage requirements, and consumer protections. These regulations ensure that health insurance plans comply with state and federal laws, providing essential benefits and protecting consumers from unfair practices. By governing premium rates and coverage standards, regulations aim to promote affordability and accessibility of healthcare for residents of Massachusetts. Question 104. Which provisions of the Affordable Care Act, ACA, are particularly significant for health insurance consumers in Massachusetts? A. The ACA mandates coverage for preventive services without cost sharing. B. The ACA requires all health insurance plans to offer coverage for elective cosmetic procedures. C. The ACA prohibits the sale of health insurance across state lines. D. The ACA limits the availability of subsidies for low-income individuals. Correct answer: A. The ACA mandates coverage for preventive services without cost sharing. Explanation: the Affordable Care Act, ACA, mandates coverage for preventive services without cost sharing, ensuring that consumers in Massachusetts have access to essential preventive care such as immunizations and screenings at no additional cost. This provision aims to promote early detection and prevention of illnesses, ultimately improving public health outcomes. Understanding ACA provisions is crucial for insurance professionals to navigate the regulatory landscape effectively. Question 105. How do HIPAA regulations and privacy rules impact health insurance practices in Massachusetts? A. HIPAA regulations do not apply to health insurance companies. B. HIPAA rules protect the privacy and security of individuals' health information. C. HIPAA regulations exclusively govern insurance premium calculations. D. HIPAA regulations mandate coverage for specific medical conditions. Correct answer: B. HIPAA rules protect the privacy and security of individuals' health information. Explanation: HIPAA, Health Insurance Portability and Accountability Act, regulations establish standards for protecting the privacy and security of individuals' health information. Health insurance companies in Massachusetts must comply with HIPAA requirements to safeguard sensitive patient data and prevent unauthorized access or disclosure. Compliance with HIPAA rules is essential to maintaining trust and confidentiality in healthcare transactions and ensuring the security of health insurance practices. Question 106. What is a key feature of health insurance exchanges, marketplaces, in Massachusetts? A. Exchanges are only available for Medicare beneficiaries. B. Exchanges provide a platform for purchasing health insurance plans with standardized coverage options. C. Exchanges are operated solely by private insurance companies. D. Exchanges do not offer any financial assistance to eligible individuals. Correct answer: B. Exchanges provide a platform for purchasing health insurance plans with standardized coverage options. Explanation: health insurance exchanges, marketplaces, in Massachusetts offer a centralized platform where individuals and small businesses can compare and purchase health insurance plans with standardized coverage options. These exchanges promote transparency and consumer choice by providing clear information about plan benefits, costs, and quality ratings. They play a crucial role in enhancing access to health insurance coverage for residents of Massachusetts. Question 107. What is a special enrollment option for individuals in Massachusetts health insurance marketplaces? A. Special enrollment is available only for individuals under 18 years old. B. Special enrollment allows individuals to enroll outside of the annual open enrollment period under certain qualifying life events. C. Special enrollment is limited to individuals with employer-sponsored coverage. D. Special enrollment is not applicable in Massachusetts. Correct answer: B. Special enrollment allows individuals to enroll outside of the annual open enrollment period under certain qualifying life events. Explanation: special enrollment options in Massachusetts health insurance marketplaces enable individuals to enroll in or change their health insurance coverage outside of the annual open enrollment period if they experience qualifying life events such as marriage, birth of a child, loss of other coverage, or relocation. This flexibility ensures that individuals have access to health insurance coverage when their circumstances change outside of the standard enrollment period. Question 108. What are subsidies and premium tax credits offered through health insurance marketplaces in Massachusetts? A. Subsidies and tax credits are available only to senior citizens. B. Subsidies and tax credits are provided to individuals based on their income to make health insurance more affordable. C. Subsidies and tax credits are fixed amounts that do not vary by income level. D. Subsidies and tax credits are only applicable to employer-sponsored health insurance plans. Correct answer. B. Subsidies and tax credits are provided to individuals based on their income to make health insurance more affordable. Explanation. In Massachusetts, health insurance marketplaces offer subsidies and premium tax credits to eligible individuals based on their income levels. These financial assistance programs aim to make health insurance more affordable for low and moderate income residents. Subsidies reduce monthly premium costs, while tax credits can be applied when filing taxes to offset the overall cost of health insurance coverage. Question 109. What is a key characteristic of managed care organizations, MCOs, in Massachusetts? A. MCOs primarily focus on fee-for-service reimbursement. B. MCOs aim to control healthcare costs while maintaining quality through utilization management. C. MCOs are not regulated by state insurance departments. D. MCOs do not require pre-authorization for specialty care. Correct answer. B. MCOs aim to control healthcare costs while maintaining quality through utilization management. Explanation. Managed care organizations, MCOs, in Massachusetts are designed to control healthcare costs by implementing utilization management techniques such as pre-authorization for certain services, provider networks, and utilization review. They focus on coordinating care, emphasizing preventive services, and promoting cost-effective treatments to ensure quality healthcare delivery while managing expenses. Question 110. What role do network structures play in managed care organizations, MCOs, in Massachusetts? A. Network structures are not utilized by MCOs. B. Network structures involve contracting with specific providers to deliver healthcare services at negotiated rates. C. Network structures have no impact on healthcare costs. D. Network structures do not require member enrollment. Correct answer. B. Network structures involve contracting with specific providers to deliver healthcare services at negotiated rates. Explanation. Managed care organizations, MCOs, in Massachusetts establish network structures by contracting with specific healthcare providers such as hospitals, physicians, and specialists. These providers agree to deliver services to MCO members at negotiated rates, which helps control costs and ensures access to care within the network. Question 111. What is the purpose of utilization review and managed care techniques in Massachusetts? A. Utilization review aims to increase unnecessary healthcare spending. B. Managed care techniques do not involve controlling healthcare utilization. C. Utilization review helps ensure appropriate use of healthcare services while managing costs. D. Managed care techniques primarily focus on unlimited access to healthcare services. Correct answer. C. Utilization review helps ensure appropriate use of healthcare services while managing costs. Explanation. Utilization review and managed care techniques in Massachusetts are designed to promote appropriate use of healthcare services by evaluating the medical necessity and efficiency of treatments. These techniques help manage costs by reducing unnecessary or excessive healthcare utilization, improving quality of care, and supporting evidence-based practices within managed care organizations. Question 112. What is a crucial step in health insurance claims processing and adjudication in Massachusetts? A. Issuing claims without verification of policyholder information. B. Adhering strictly to claim denial procedures. C. Ensuring accuracy and completeness of claim submissions. D. Delaying claims processing for policyholders. Correct answer. C. Ensuring accuracy and completeness of claim submissions. Explanation. In Massachusetts, health insurance claims processing requires accuracy and completeness to ensure timely and appropriate adjudication. Insurers must verify policyholder information and thoroughly review submitted claims to determine coverage eligibility and benefits. Claims that are inaccurate or incomplete may be subject to delays or denials, impacting policyholders' access to healthcare services. Question 113. What information is typically provided in an explanation of benefits, EOB, or claims statement for policyholders in Massachusetts? A. Detailed medical records of the policyholder. B. Notification of denied claims only. C. Summary of services rendered and insurance coverage details. D. Confidential financial information of the policyholder. Correct answer. C. Summary of services rendered and insurance coverage details. Explanation. An explanation of benefits, EOB, or claims statement in Massachusetts typically includes a summary of healthcare services provided, insurance coverage details, and payment information. It helps policyholders understand how their claims were processed, what services were covered, and any out-of-pocket expenses. This document is essential for transparency in healthcare billing and insurance coverage. Question 114. What role does fraud prevention and detection play in health insurance claims management in Massachusetts? A. Fraud prevention is not a priority for insurers in Massachusetts. B. Detecting fraud is solely the responsibility of policyholders. C. Insurers implement strategies to identify and prevent fraudulent activities. D. Fraudulent claims are automatically approved to expedite processing. Correct answer. C. Insurers implement strategies to identify and prevent fraudulent activities. Explanation. In Massachusetts, health insurers are committed to fraud prevention and detection to protect policyholders and maintain the integrity of the insurance system. Insurers use advanced analytics, monitoring tools, and collaboration with law enforcement to identify suspicious patterns and activities. Preventing and detecting fraud helps reduce costs, ensure fair premiums, and safeguard the overall healthcare system. Question 115. What are some ethical considerations that insurance agents must adhere to in health insurance sales and service in Massachusetts? A. Engaging in deceptive marketing practices to increase sales. B. Disclosing accurate and relevant information to policyholders. C. Offering incentives to policyholders to encourage unnecessary coverage. D. Providing biased advice to maximize agent commissions. Correct answer. B. Disclosing accurate and relevant information to policyholders. Explanation. In Massachusetts, insurance agents are required to uphold ethical standards by providing policyholders with accurate and relevant information about health insurance products. This includes explaining coverage details, benefits, limitations, and potential costs associated with different plans. Agents must prioritize the best interests of policyholders and avoid engaging in deceptive or misleading practices. Question 116. What consumer rights and protections are guaranteed to policyholders in Massachusetts regarding health insurance? A. Right to deny coverage based on pre-existing conditions. B. Right to appeal claim denials and coverage decisions. C. Right to cancel coverage without notification. D. Right to change policy terms without insurer consent. Correct answer. B. Right to appeal claim denials and coverage decisions. Explanation. Massachusetts policyholders have the right to appeal claim denials and coverage decisions made by health insurers. This includes the right to request a review of denied claims and challenge decisions that are deemed unfair or incorrect. The appeal process ensures that consumers have recourse when they believe their claims have been unjustly denied. Question 117. What constitutes fair marketing and sales practices in the context of health insurance in Massachusetts? A. Using high-pressure tactics to coerce policyholders into purchasing coverage. B. Offering discriminatory pricing based on race or gender. C. Providing clear and accurate information about insurance products. D. Concealing important policy details to influence purchasing decisions. Correct answer. C. Providing clear and accurate information about insurance products. Explanation. Fair marketing and sales practices in Massachusetts require insurance agents to provide clear, accurate, and non-misleading information about health insurance products to consumers. This includes disclosing terms, conditions, costs, and coverage limitations upfront to enable informed decision-making. Agents should avoid using coercive or discriminatory tactics and prioritize transparency in their interactions with consumers. Question 118. Which of the following is an example of a supplemental health insurance product commonly offered to enhance coverage beyond basic health insurance plans in Massachusetts? A. Homeowners insurance. B. Auto insurance. C. Disability insurance. D. Dental insurance. Correct answer. D. Dental insurance. Explanation. Dental insurance is a type of supplemental health insurance that covers dental care expenses, such as routine checkups, cleanings, fillings, and other dental procedures. It is often offered as a standalone policy or as a rider to a health insurance plan, providing additional coverage specifically for dental services. Question 119. What are optional policy riders and endorsements in health insurance, and how do they impact coverage in Massachusetts? A. They are required additions to all health insurance policies. B. They are enhancements or modifications to standard policy terms and conditions. C. They are discounts applied to health insurance premiums. D. They are legally binding contracts between insurers and policyholders. Correct answer. B. They are enhancements or modifications to standard policy terms and conditions. Explanation. Optional policy riders and endorsements in health insurance allow policyholders in Massachusetts to customize their coverage by adding specific benefits or modifying standard policy terms. Riders can include additional coverage for services like maternity care, prescription drugs, or mental health treatment, providing more comprehensive protection based on individual needs. Question 120. What is the purpose of critical illness and long-term care insurance in Massachusetts? A. To provide coverage for routine medical expenses. B. To protect against the financial impact of serious illnesses or extended care needs. C. To offer discounts on health insurance premiums. D. To replace lost income due to unemployment. Correct answer. B. To protect against the financial impact of serious illnesses or extended care needs. Explanation. Critical illness and long-term care insurance policies in Massachusetts are designed to provide financial support in the event of major health crises, such as cancer, heart attack, stroke, or the need for long-term care services. These policies typically pay a lump sum benefit upon diagnosis of a covered critical illness or provide coverage for long-term care expenses, including nursing home care, home health aides, and assisted living facilities.